Hi guys, welcome back to the Market Monitor. It's been quite some time now and it's exciting to finally be back. But yeah, let's get going. Alright, so basically in the past 10 days, I have done absolutely nothing in the markets. And the reason for that being that there's not really been much to do. One position that I did make was Oswald Pumps, which I'll show you all right now. Right, so this was the stock, purchased it on, hold up, 1 second. Right, so on the 1 hour time frame, I found an entry point over here and I purchased the stock on this particular day. But again, as you all can see, the stock did not really do much and went up. My cost was around, I think, 669 and went up around 6-7% from my buying point, but they had a big fall on the 1st of July. So again, there was no real action in the market in this time. One stock that did do I exited Oswald Pumps in profits. I exited, I think, at a 2-3 or a 3 to 4% gain on a 10% position size, so not really any major impact on portfolio. A stock that I did miss was Bajaj Defense, I think. Bajaj, hold on 1 second, should be over here. Right. So a stock that I did miss was Bajaj in defense manufacturing, and this was something that I wanted to catch. However, to be very honest, this broke out on the 27th of June. Market was not really giving me the feedback that I required to make a position. My stop loss was around what? If I was to purchase at this price as well, my stop loss would have been around 4%. So even if I did make a position, it wouldn't have been a big one. And the idea is that I want to be in the markets and I want to be in them aggressively when the time is right and when the odds are in my favor. Again, taking you back to the first 2 weeks of June, right? This is the action I want to be part of. Then we see a big fall, then you're going up. That's fine. But are the stocks displaying the characteristics I want them to display? There was no sectoral strength in this entire space. There were no sectors that were actually leading except for financial services, and most names over there were slow movers as well. So overall, the markets recently have been quite stagnant ever since, I think, 11th of June, where our power topped, if I'm not wrong. Yeah, our power topped on the 11th of June, and since then the markets have been quite stagnant. Some names that were working, for example, was Ratan India Power. Again, I explained this in detail on Twitter as to why I did not trade this, and the reason being that there was no golden cross. And I saw this in Cochin Shipyard, and we pointed this out as well earlier, that the moment the golden cross takes place, you see a big movement, right? You see that the stock has the ability to survive. Okay, you break out here, you're up 10%, but what happens? You're back at your cost, right? So again, till the time there's no golden cross, I have realized in my trading that it's better to wait and not, make a position, especially not an aggressive position. So this is a stock that I decided to pass. Another stock that I decided to pass was Transraill recently. The reason being that, again, wide stop loss for me personally. I'm not saying it's a bad trade. I'm saying that it does not fit for my personal goals. As you all can see, I've marked a lot of news flow here. I was looking at the stock very, very ardently on the 11th of June. However, because of this breakdown, and then if stock sets up here, breaks out 7%, up another 3% today, this is completely okay with me. Go up more, go to the 800 levels, consolidate for 4-5 days, I'll buy you. But I need a tighter stop and I need better consolidation. I don't want to jump at any name. And I'm not saying that this is a wrong trade. If you've taken this, you're good because you're in profit, so you're right? But for me personally, it's not a trade. I want to trade when the sector is in action. Q Power, just look at this stock, right? Look at the movement that it's made. It broke out on the same day as our power, and the stock has gone up 53%. I passed Q Power because it gapped up on opening, but if I bought this stock, I would have been up 50%. But these are all things in hindsight, and you can't really do anything about this. You have your rules, you follow your rules, and the point of rules are that you make money on the longer period of time. Sure, you can tell me that I missed Transraill or I missed Bajaj Indef manufacturing. The idea is that okay, I missed them, but I know that my system will guarantee me gains in the way that I want them over a consistent period of time. Again, bringing it back to the point that I want to target the market, especially when I see the break of levels of 19,153. These levels, or 19,150, are very important. As we can see, the market is now range bound, and when the markets are range bound, it is amazing for two reasons. First reason, we get absolute clarity of what is going to happen in the future, and point number two is that at that moment we know that we don't have a lot to do in the markets, and that is good clarity as well. If the stock market, or if the small cap index, to be more precise, is to break these levels of 19,150, we're going to see another up leg. Another good thing, we're already in this golden cross, which is a very, very positive thing for, the small cap index. However, if the index decides to break these lows of 18,900, then we can potentially see another down leg, maybe to the 50-day, maybe to the 200-day. No one knows, no one can predict, or maybe we just fall another 20% from here. The point being that no one can predict what's going to happen in the market, because the market is always supreme. So the idea is to keep tight and just wait for your particular ball to come. It's a test cricket game. It's simple. You just have to wait for the ball to come, like Shubman Gill did for the past 2 days. Just wait for the ball to come, play your shots. Don't run after every single ball. It's the same ideology over here as well. Just wait for the stock, wait for your setup, and trade that in big sizes, right? R Power, this was my setup, traded in a big size. GRSE, my setup, traded in a big size. The idea is that you trade your sizes, your stocks, and make your gains. Don't run after every stock, because there is going to be a lot of things that are going to influence you. There's a lot of social media noise going around, right? So stay true to your game. Whether that's taking Transraill at these levels, if that's the case, then go ahead. But for me, it was not. If it is for you, amazing. Beautiful trade. You're doing massive profits, probably 8-9%. So that's amazing, right? Again, bringing it back to the fact that the point is the market is range bound right now. There's not a lot to do. Just sit tight, wait for the market to print its next move. The 10-day has caught up, which is something that I'm really liking. We should see next week being very important. I've still not scanned stocks yet, so I'm not too sure about the sectoral action or the setups that are being formed. The idea is that take the weekend to really deep dive into how stocks behave when the markets are making these green zones, right? And how sectors behave as well. Study this green zone and study what sectors were working here. Study this green zone, study what sectors were working here, if there were any. Study this green zone and see, was there sectoral action? There wasn't. But why was there no sectoral action? Was the market just waiting for another pullback, which did take place, right? Another thing that you can do is also go and revisit some of the biggest winners of like the 23-24 bull run. Notice how they behaved right before their breakout, right? You can look at RVNL, you can look at MassDoc. There are a lot of names that made absolutely big moves. Coach and Ship. Study their patterns, study how they worked, right? Vari Energies as well. This is an IPO base that worked beautifully, right? Study these names as well. How did these work? What were the basis points? When do you enter? When do you exit? Ellen was a stock that a lot of people were talking about that broke out, but the idea is that there was no pivot here. Sure, on the 1 hour time frame, right, you have the pivot point here, but we are swing traders, right? And a swing trader's job is to wait for something like this to form. You see this, right? The next day, you give me an inside day, and I buy you on these levels. That's ideally what should happen, and that's exactly what happened in Vari as well. In fact, Vari was even better. Let me show you. Right, if I show you Vari was even better because it gave us 2 inside days, and then you enter at these levels and you're up 50%, right? So that's how you make these trades. Go back, study how you can size these positions, how to know when to attack and when to defend, etc. Because right now, to be very honest, there's nothing to do in the markets for me personally. I'm going to wait for the range to get established. I'm going to wait for the markets to tell us where the stocks are going to behave and how they're going to behave and where the market wants to go as well. Another position I took today was Sambhav Steel Tubes. Now, again, this position was taken on the 1 hour time frame. Oh, sorry. Sambhav Why not time frame? Yeah, there you go. So this position was taken at the break of these levels, around 103 or 104, and the stock squatted. So I hit I think a 2% stop. I think I got slippage 104.39. Yeah, so around a 2.2% stop loss, 10% position size, 0.2% impact on portfolio negative. But there's no real big issue here. It's a small stop. There's no problem as such. It will be recovered in maybe half a trade. So I did take a trade in Samba Steel Tubes because IPOs were doing well, and I got this inside day on this day. But again, this could have been a past trade as well. There was no real, catalyst or nothing that I was like, I have to take this trade. It was just a punt to see how the market was going to behave and test the waters. One thing that I could have done better is probably taken a 5% position instead of 10% position size, because I'm coming back after a break, etc. But again, these are things in hindsight, and this is what we will review and get better at after you go through these trades. 3 months down the line, you're looking back at the trade and you're like, oh, I shouldn't have taken this, instead I should have done this, etc. So that's how you do it. You do a quarterly review of your trades of the previous quarter, because then there are no emotions attached, right? So R Power, for example, I have emotions attached right now because I've made good money in this stock. But maybe when I look back at it 3-4 months down the line, I would have no emotions attached, and then I could say, oh, I missed this entry here. Why did I not buy it on this point? Oh, I could have added way more over here. Why did I not do that, etc. So to avoid all of that, it's better to make quarterly analysis after one quarter of the previous quarter. And that's exactly how I go about analyzing my trades as well. I found it to be quite fruitful because you can understand what's going on in the markets, etc. Now, a couple of names that I'm liking that I would like to discuss is Kirloskar Brothers. Needs some more consolidation, but good buying momentum, right? Let's just go from here. Yeah, cool. So a couple of names. BSE, okay. Now this news of the Jane Street ban is actually quite concerning, but at the same time, it's better late than never, right? So I'm not going to discuss it in much detail, but yeah, a lot of the financial services stocks saw a big breakdown. Motilal Oswal was actually doing really well yesterday. Good breakout, 9% breakout, and now you've given an inside day. So consolidate a bit more and maybe a potential position could take place. You've come into a golden cross as well, so that's another good sign. But apart from that, Nesco was something that I was tracking very, very ardently. 1202 and 1203. Okay, no, so now this has already made the breakout. So again, you're gonna have to give me another inside day and then I can probably consider you. But again, small stock, no liquidity, so could probably pass this as well. So the point is that, as you all can see, there are no setups, no clear sectoral action. So there's no need to, be very hasty with the markets right now. Take your time, protect your gains, protect your capital. Suven is looking good. I'm liking this base in Suven. It's making a nice flag. But would I be buying this? Probably not. Why? The markets are not in my favor. At the same time, there's no clear sectoral action, so I'm out. Nuvama took a big fall today, 11-12%, right? Again, the same, the news that it's a news affected fall. So most financial services names would also be quite disturbed from this entire whatever's gone on. But yeah, there's nothing to do in the market. Honestly, just take a chill pill, enjoy, review your previous trades, read books, watch a couple shows, watch the India-England game, and wait for the markets to give us a range and also sectoral action. Remember the golden rule: environments over sectors over setups, they work every single time, right? And I've realized this recently. Everything comes in clusters in life, whether that's good things or bad things, they're going to come in clusters. I made 10% portfolio impact in 2 weeks, and for the past 3 weeks I've done absolutely nothing and I'm sat flat, maybe 0.2 0.3% up or down here or there, but that's no real impact, right? So the idea is that everything is going to come in clusters, and that's exactly how swing trading is. In 2 weeks you're going to make money for the entire next 3 months, and then you're just going to sit out. So that's what you need to do. Be patient, be observant, and make sure that you're making the right decisions. I'll see you all next time. Thank you.